please. All right. We should be underway here. I'm going to remove this before people jump in this live stream thinking I took this GJ buy. I did not take the GJ buy, ladies and gentlemen, because I know better. If you know better in trading, you have an obligation to do better. Like I said, risking 1% on this NASDAQ trade so that I can make 5% on my account. There's really nothing much to it. Believe the economy is down on money, but confused to how pairs are reaching new highs. So you have to look at which pairs. So the things that are the most closely tied to the US economy are going to be the dollar index, because the dollar is our national currency, and it's also the world's reserve currency. So the dollar is not just a measure of health of the US economy, it's also a measure of how our trade balances are with the rest of the world. Okay, a cheap dollar has been pretty good for us historically, because if the dollar is low, then we can buy more goods outside the United States. Things cost more to export, and our trade balance is usually pretty good. Right now, a weak dollar means that certain pairs are going to go up. So anything that has a USD at the end of it, here's how I'll explain it. So if the dollar is bullish, and this is something that you guys would write down in your notes. Okay, so you guys have to understand a few key language points here. So there's a word called correlation, which means how closely things are tied together, how closely they move together. So if one of them pushes up 10 pips, the other one will also push up 10 pips. That's a 100% correlation. They're very correlated. The opposite of that is non-correlated. Actually, I'm gonna take a sidestep here. I'm actually gonna do counter correlated. Counter correlated means they move opposite. So the dollar and the dollar pairs are counter correlated. So anything that has a USD at the end of it will be bearish if the dollar is bullish. But right now, since the dollar is bearish, things like Euro USD, GBP USD, AUD USD, etc., they're going to be bullish. Okay. Hence why we've seen a little bit of confusion on GU and EU. It'll try to push up, and then it can't push past a certain point because the dollar hasn't really made its move. The dollar is the dominant currency pair in any currency transaction because the dollar has the most volume globally. Okay, so it really runs the show. So you see a bearish dollar, then you can go GU, Euro USD, etc., etc. Now, it's not like a 15-minute or 1 hour decision. So I don't use the smaller time frames to use these correlations. Instead, what I will do is, if I'm expecting the market to drop for the dollar, and I'm expecting a move all the way up here to these highs before we crash, then I'm expecting the exact opposite on Euro USD and GBP USD, correct? So I'll be expecting a push to the downside on GBP USD before a massive push up. And so I'll use this on the higher time frame to look at the next few moves. Okay, short-term push versus long-term blank. Okay. And that's how I look at those currency correlations. Now, when we look at the economy, I mostly look at the economy in terms of the indices. There are, I don't want to turn this into a full fundamentals lesson, but I feel like this stuff just doesn't get talked about enough. And so I'll say that there's 3 different kinds of investments that I see today. And there's obviously, there's more. Let me keep this simple. One of them is risk-heavy investments. Okay? And this is anything from stocks, commodities, but I can't even say commodities because, gold is in that category and gold is a safe haven. So I'll just say stocks and Bitcoin or crypto. And obviously, crypto is a lot riskier than stocks in most people's eyes, but I'm going to put them in the same category of investments that people use to generate a high return for themselves or their clients. There are low returning investments that people get into. Like, well, Roy, why the hell would anyone get into a low returning investment? Because they're safer. If your parents are 70 years old or 80 years old, you guys want to throw them in the hottest tech stock, test their luck. Here's your retirement savings, guys. Let's see if this new waffle maker company that you just think and the waffle shows up is going to save your retirement. Can't do that. It's too risky. So tech stocks and things like that, they tend to be on the riskier side because they're speculative. There is no fact that they're going to work. It's really just a gamble of, you know what, I believe in this technology. I believe in the future of where the economy is going. And I think that there's a tailwind for that industry. I'll get in. So they're speculative. There's risk heavy investments. Then there's risk averse investments. These are the low risk guys. These are bonds, which don't pay jack diddly squat. You'll probably lose money in bonds. Money market funds. I don't even want to say ETFs. I would just say bonds, money market funds, treasuries, which are specifically government bonds. I guess you would put a certificate. I wouldn't even put a CD in here. I'm not going to put all that bank stuff in here. Okay. And you guys can also include in this risk averse stuff all those bank products like money market funds. You guys can include certificates of deposit where you go into a bank and you give them some money and they're like, okay, I'll pay you back this money later with a low interest rate. Okay. Kind of sounds like a bank account. And then there are safe havens. So number 3 is the safe havens. And so depending on what you're trading in Forex, you'll have to understand how the economy impacts these 3 different things. Okay. Currencies are actually in this category right here. Because they don't give you a return on your investment. Actually, you know what? I can't even put the currency here because it's not an investment. You'll lose money in the currency. And I won't say national currency. I'll use the US dollar specifically because the dollar is special compared to everybody else. Okay. So those are the 3 different categories. When we're trading indices, we're in this risk heavy investment category. Here's the quick flow. When times are good, everybody wants to be here because this is where you're raking in all the money. 15% return a month, 50% return a month. Oh, my crypto portfolio is up 1,000%. That's where you see these crazy numbers. Okay. When times are good, you want to be in the risk heavy stuff. In times where things are all right, where you're starting to get skeptical, in just regular times, if you're a smart investor, you'll have a portfolio full of the risk averse investments as well. This is based on everyone's risk tolerance, age, et cetera, et cetera. And so if someone's older, they might have a mix with more risk averse stuff than risk heavy. If you're younger, you might have a risk heavy investment portfolio with a lot less risk averse stuff. When times get dangerous, when times get uncertain, when we don't know the outcome of a certain thing, that's where folks pile into safe havens. Okay. And when I say folks, I don't mean like, your neighbor Joe Schmo, unless your neighbor is a freaking hedge fund manager. I didn't mean to insult him. But if there's an institution out there with large funds, large capital that they're trading for themselves or their clients, they will move it somewhere safe until the dust settles, and then they will jump back into the markets. So in the past, there have been a few different safe havens that everyone jumped into. When shit got really crazy, got really hectic, people jumped into gold. The reason that gold has been such a messy instrument to trade is because people are deciding whether they want gold in their portfolio or whether they want Bitcoin in their portfolio because they both play the same exact role. Okay. People think that if the dollar system crashes and we're all, back in this World War III state, that we're either going to be back on the gold standard or we're going to be back trading Bitcoin. And that is the debate. Be like, well, if the world ended today, all your computer money is useless. I'm like, okay, well, if the world ended today, are you going to lug around this 1-ton thing of gold or these bricks of gold in your backpack? No, you're not. And so there's all these arguments about which one is the superior safe haven. And that's why we're seeing a lot of indecision in those markets as money flows out of those traditional safe havens like gold and flow into these new areas such as cryptocurrencies. So when you're looking at the economy, say, which one of these three is it affecting? How bad is it? Okay, let me jump in. And there's different things that affect these. Obviously, we'll have a whole discussion on this weekend's boot camp. But risk heavy stuff, the stocks, this responds big to stimulus. When they print money, you better buy these freaking instruments. If you do not buy stocks and crypto before the money printing, it will be too late, because by the time that they actually print the money and it goes into the circulation and it actually gets in the hands of people, and then people start to, put it in their accounts and buy it and all this stuff, the price is already going to have appreciated because the institutions will have bid up the price in anticipation of retail traders jumping in. And so that is the biggest trigger for me, is I'm always looking for stimulus. This infrastructure BS in America, as stupid as that bill is, because I did not read the whole thing, I read a abstract that someone wrote. The bill is freaking stupid. If they actually pass that bill, they pass, I think now they're down, they started at 2 trillion, now they're down to 1.1 or something. If they actually pass 1.1 trillion, yeah, I'm buying up every freaking stock that I can and all the cryptos that I can, if I'm not already. Okay, that's my take on the bigger picture stuff and how the economy is going. So right now, which phase are we in? We are in the indecision and we're in the evolution phase. Money is coming out of the traditional safe havens. It's leaving the traditional cyclical stocks and the industrial stocks, and they're moving into these high risk assets because it's the only thing that's generating a return. And so the reason that things are still making all-time highs is because the investors don't know where to put their money. And so they're going to put it in the only place that they know is protected by the government. Well, not crypto. They know that stocks are protected by the government. They know that stocks can't fall. Me and James Storms became friends because of this argument on a stream. I told him that stocks can't fall. Stocks do not go down. And he says that's not true, because he was obviously shorting all of these. Stocks can go down temporarily, guys. Okay, if there's a giant fundamental shock to the market, then stocks can go down. But overall, the market, it will forever be bullish. Okay, it's for three reasons. Everybody puts money into their 401k every 2 weeks. Well, you don't do it, your employer does. And so there's hundreds and billions, or not hundreds of billions. There are probably tens of billions of dollars a month being allocated to stocks just because people are going to work and working. Now, who has a short interest against, that, against everybody in America working? And then on top of that, if the markets ever do crash, the Federal Reserve does not hold drawdown well. Okay, if you guys were holding drawdown and there was a kill switch where you can print money and change the direction of the market, wouldn't you? Of course we would. That's what Jerome Powell's been doing. And I don't want to just blame him, but that's what the Federal Reserve chairs do. They're like, we will not print more money. And then the economy starts to crash and the markets are down 8%, 9%, 10%. And Main Street Americans are on the streets scared for their life. And Jerome Powell's hands get sweaty, leans over to that money printer, he presses that button, and the economy saves itself. And that's what I think about these indices, is that if the markets ever do feel a shock to the system and they do see a percentage drop that's significant, the Federal Reserve will rebound and start buying stocks in the open market in order to stimulate the economy, which is what we saw here. Okay, whenever you guys see massive pushes and a revival of the market, it started off with the Federal Reserve deciding this too much is too much. We are going to go in there. We're going to buy up as many stocks as we possibly can in the open market, and we're going to flood the markets with cash. By buying up these stocks, we're going to bid the price higher and higher, and that's going to increase the value of everyone's 401k portfolios. So carrying a backpack of gold bricks is nuts. Roy be hitting hard truths in the most violent forms possible. Serge, it's early in the morning, brother. I'm not even trying to be violent, man. The economy is not sweet. Everybody wants you to be like, well, guys, inflation is running high. There is nothing cool, calm, and collected about the price of gas being $10. All right. If you guys hear me panicking saying buy crypto, who's this crazy guy over there yelling buy crypto? You'll understand why in about 8 to 12 months, I'm expecting a major market crash. Because guys, we're building a recipe for disaster in the American market, which is the buyer of last resort for the rest of the world. The rest of the world makes shit. And then they look around, who wants to buy my shit? And the rest of the world's like, well, we don't have money either. All right. So we're not going to buy the rest of your stuff. We'll buy just enough for what we need, and we can't buy the rest. And America steps in and is like, whoa, we'll buy more than we need because we're wasteful. And so Americans are the consumer of last resort globally. And if the American economy suffers, so does the rest of the world because we can't buy people's useless stuff for no reason. And so it's very important to measure what's happening in our economy. So when we look at today's economy and we see that there's millions of unemployed individuals, not because they can't find a job, but because there's 11 million open jobs and 4 million unemployed folks. 11 million open jobs, 4 million unemployed. You guys do the math. There's a $6 million difference. So in all actuality, we're facing something called a labor shortage. Labor shortages are very dangerous. This is something that could significantly hurt China in the long term. With they had that one-child policy. It's not just a population thing. You need qualified young people that are going to school to learn stuff or learning specialized skill through practice and being able to go into the society and be useful in very different ways. Are we building engineers that can build our bridges? Are we, urging children to learn coding in elementary school, middle school, and high school so they can build the future of this country? I don't see that shit anywhere. New York and Cali just ended the gifted and talented programs for math and sciences. As we're headed in a pretty dangerous direction. And so what I want all of you guys to do is, okay, we can all have our moral objections about this stuff. Okay. My favorite saying, one of the people that I used to watch, Jim Rohn, motivational speaker back in the 70s and shit. Funny ass guy, but he had this saying that always stuck with me. Shit is always going to be wrong with the world, right? And we could all have our moral justifications for why we feel that way. Here's the example he used. Imagine you walk out today, there's this big monstrous thing that's just lifting up in the sky, just standing there in the middle of the sky, this big monstrous thing. And then every once in a while, big monstrous thing falls out of the sky and crashes, causes havoc for 50 miles in every direction. Horrible thing. Okay, big monstrous thing in the sky. Now we could all have our moral justifications about this big thing in the sky. We could all shake our finger and say this is an unfair system. This is an unfair, situation that we have going on. And he said that's fine because you're entitled to your opinion. But if you're going to shake your finger at the sky, just do it from over there. Do it from out under the fucking rock. Don't sit there under the big monstrous thing shaking your head. Oh, this has got to be a stupid arrangement. Do it from over there. And so, yeah, economy's fucked up. People ain't getting jobs. Shit's messed up, all this stuff. That's fine. Big monstrous thing in the sky. We can all have our moral justifications, shake our finger at the sky. Or we can do it from over there, which means the side that's protected. Buying risk hedge assets like cryptocurrencies, real assets like commodities, real assets like real estate, et cetera, to hedge ourselves out of this dollar crash. That's my shtick today, guys. That's not my shtick. What's the saying? That's my spiel for today. All right. That's my economics talk. If you guys have more questions, obviously, I will answer them. But that's basically my whole overview of the economy. Shit's messed up. You could have your say about it. You can have your opinion, shake your finger at the sky, but get fucking rich first. All right, because it's going to be a lot easier to deal with whatever it is you're complaining about with that money in your pocket. Ladies and gents, NASDAQ on the daily broke above these previous highs. We look left a little bit more, previous buy level. We see where we are right now. We're still holding that support. Ladies and gents, I got 1% on this trade, waiting for that 5% return to see how today is going to go. And I will make this useful. I want to show you guys something really cool. It's how to actually calculate your true risk and reward versus your nominal risk and reward. Oh, Roy's throwing all these econ words at me again. Listen, guys, I'm here to simplify shit for you. Okay? Your nominal risk and reward is that number that TradingView shows you. Okay? That's 5 to 1. That's great. That means I'm risking 1% to make 5%, which is great. Now, you guys know me as I'm a thinking man. You guys know me that I take partials. All right. It's a thing that I do. Most of my money in my trading career has actually come from taking partials. That's a fact. Most of my money in trading has not come from TP smash. It's actually come from securing partial profits. The market didn't even go my way. All right. And I understand that there are some other times where I'll make big bucks holding a trade. So I'm not negating the power of patience and holding. I'm just giving you guys my literally like real life. Most of the money I've made in my life from trading, especially the big profits that have like significantly helped my account, came from taking partial profits. These fucking trades didn't even go my way. Just a quick side note. Now, the real risk and reward, I have to subtract the partials out, because if I take partial profits, I'm not really making 1%, am I? All right. So, like, is Roy going to explain this concept while we just literally jump 500 pips into profit? Most likely. Listen, this means I'm risking 1% to make 5%. So let's say I take my partial profits at these previous highs, because that's usually what I would do. Ladies and gents, that risk and reward is 1.27. Okay. Let me look at this. 350 points, 3,500 pips. So if I hold this trade all the way, it'll be 3,500 pips. If I take partial profits, 820. Partials at plus 820. And hold a runner. These are the two different strategies. I used to do weekend talks about this for hours, explain the difference between holding a trade versus taking partials and why most folks are not calculating their risk and reward properly. Because it's a trap. You'd be like, oh, I thought it was 1 to 5. I thought one trade was supposed to make up for 5 losers. Well, if you're not holding it all the way, it's not really 5%, is it? It's not going to make up for 5 trades. If you're only making 1 or 2%, it's going to make up for 1 or 2 lost trades. So let me show you guys the difference. And here's a reason why I take partials. When you say I'm going to hold all the way to make 3,500 pips, if I asked you which one would you like better, 820 or 3,500, everybody would say 3,500. That's the natural response. The problem is when you're up in profits, this 820 that you pull out, that partial profits that you pull out is guaranteed because you're already in profits. You holding for this imaginary 3,500 that it might come all the way up to the top is a risk. I'm not saying it won't happen. We're kind of nice with the analysis around here if you haven't noticed. It's possible, but that's not guaranteed money. Are you here to guarantee yourself money, or are you here to gamble yourself into potential riches? If you're here to gamble into potential riches, you're in the wrong game. Go to the casino. Shit's a lot more fun. If you're here to actually make guaranteed money, there's a system that you have to develop. So let's pretend that we took this with a 0.02. Okay. Small account. It's not a micro. We want to be able to take partial profits for this example. So it's a 0.02. If I held this first option, 3,500 pips at a 0.02 is about $700, if I'm not mistaken. You guys can correct me if I'm wrong here. It's early in the morning. So $700 if we hold that trade by using a 0.02. To be like, Roy, really? If I only use a 0.02, I can make $700 on my account? I said it's possible. I didn't say you will. I said it's possible. Same guy, 0.02, takes this trade. He's at 820 pips. He wants to take some partial profits. He walks away with $41. Okay. So plus 41. Now he still has a 0.01 running. If that 0.01 goes all the way for 300 or 3,500 pips, he'll make an additional $350. And so the total for this young, bright, intelligent person, this intelligent, responsible man or lady, not greedy, would be 391. Well, you say, well, Roy, that's kind of a stupid arrangement. If I held it all the way, I'll make $700. What do you mean that all the money comes from taking partials? The 700 is never guaranteed. Nothing in life is guaranteed, especially not in the markets. The market will get up to your take profit. You're at 500. All right, you're at 600. Roy, are you sure you don't want to close? Nah, man, I'm gonna hold it for $700 because that's what my analysis said. And all of a sudden it gets to 659 and then reverses, crashes out the sky, comes back and hits your break even or hits your stop loss because you're trying to wring out the last few pips of a trade that's already blessed you and already juiced in your direction. So if you have a strategy where you don't care, you're like, dude, I'm not here to, to secure these little baby pips out of the market. If it hits my stop loss, so be it. I want to be in for the full 5%. Then make your choice and do not waver. Then you have to apply this strategy every single time because eventually your trades will hit TP. Some of these trades will continue to smash through TP, and the money that you were looking for in the trades that never hit will show up. It's a perfectly available strategy. If you're like, dude, I want to wait for these, these one out of I don't know how many trades that are going to run and smash the TP. Instead, I'm going to secure partial profits and hold a runner. If my runner continues, I'll still be able to make some significant money. But if it doesn't, I will guarantee myself this $41. Okay? Do you guys see the difference? I want to see something in the chat if you guys understand the difference between taking partial profits and holding that trade. Ladies and gentlemen, if you're tuning in on YouTube, welcome to the best live stream ever created for trading. I was telling the folks earlier today, I am not going to win a popularity contest today. I'm going to tell you guys the truth. I'm going to tell you guys the facts. I'm going to tell you what they don't want you to know. So if you have any questions, now would be the time to ask. And if you guys have a trading group, send this YouTube link out to your trading group because you're being selfish. You know you're catching some sauce right now, and you're trying to keep it to yourself. If you're in these trading groups, send it out, show some love, show some appreciation, guys. Be out here spitting some facts. Where how does the dollar affect US 30 and NAS? Well, a weak dollar is good for indices. I'm going to put this as simply as possible. A weak dollar is good for indices because if the dollar is cheap, it costs more unit of dollars to buy one share of the market index, right? And so if the value keeps crashing of the dollar, then it's going to take more dollars to buy one good, right? So bread's at $4 and the dollar crashes. Now it costs $7 and $8 to buy bread. Is it because bread's got more expensive? Is it because the ingredients for bread is more expensive? No, it's because it just takes more dollars to buy one good because we've devalued the currency. Stocks are no different. So for now, we're going to see a continuation of the stocks going up until we pull some BS next year where we try to tighten the monetary cycle. We try to raise interest rates. The markets are going to crash out of the sky. Okay? I said, I'm in NAS 100. Let's go. Good stuff. I feel like you're talking to me because I'll be in 1K profit and I'll let it go back in red and sometimes hit my stop loss. Dude, I'm going to tell you right now, if you do not write it down, it will continue to happen like a bad disease. And I told you guys, I'm not here to win a popularity contest. I'm going to be fucking honest today. If you guys are not writing down your lessons in trading for the rest of your life, these things will continue to haunt you. We have traders that have been trading here for years. We have traders that came to us after 8, 9, 10 years of trading. Time in the markets does not mean anything other than the fact that you probably have to unlearn a bunch of stuff. You new guys are at a huge advantage. Everyone wants to feel like they're at a disadvantage because, victimhood is a huge fad nowadays. But everyone's like, oh, I've only been trading for a year, and that's why I can't get this and all this stuff. You are at a huge advantage at the beginning of your trading journey because you don't have to unlearn a bunch of bad habits. Okay? You can learn this shit from the jump, and you can start practicing from the jump. And so the one thing that you guys can start practicing is if you see something continuously that you think will change your trading, you have a moral obligation to yourself to write that shit down. I'm always in profits, but I always let it go back and hit red. That would take you 15 seconds to write that shit down. And so while I'm speaking, if you haven't taken out a pen and written it down, chances are that you're going to make the mistake again. I'm just being honest. All right. We coach hundreds of students a month. I'm going to be completely real with you guys today. I'm not saying that, oh, you guys suck. You'll never be successful at trading. Imagine how depressing of a call that would be. All I'm saying is, and listen to me carefully, is if you write this shit down, you are going to succeed at trading. And if you refuse to write this shit down, you're going to be up and down and in this break even cycle until you let your ego go one day because the market's crushed it out of you. You're like, oh, all right, man, I'll journal. All right, man, I'll freaking back test finally. All right, man, I'll start taking these fucking notes and putting them in my diary and shit. And then 2 weeks later, the guy's winning. Dude, I wrote down that, whenever I'm in profit, I should close my trade. And guess what? I've been closing in profits. And guess what? I'm in profits. I'm sitting there like, wow, how fucking revolutionary. Serge said I had to take over leveraging out my system. Don't rush it. The market will beat it out of you, brother. Oh, he said my ass be popping random lot sizes. Serge, you're a clown for that. We've already had 2 calls together. That's the most embarrassing thing to say in front of your mentor. Hey, thank you for spending an hour and a half with me and teaching me about proper risk management. I'm throwing that all away and embarrassing myself in front of the crowd. What are you talking about? We got the fucking lot size calculator. So do you
Oh my
apply
God.
that when you're in drawdown to cut your losses? Gomez, a great fucking question. If you secure your partials on the way up, you're also obligated to do the same thing on the way down. If you continue to secure partial profits at like 1%, 1%, 1%, but you're taking a 1% loss every time, you're always going to be in break even. And so you have to, if you're going to take the partials route, you're going to be active in the markets. You're going to, if the market breaks below the specific low, I'm going to close 70% of my trade. Okay. So I can secure a small loss. The market hits my stop loss, no problem. I ate less than 1%. If the market comes down here, I secure, I close some losses, but then it bounces back up. I can re-enter because I'm not exposed to the full 1% anymore. All right. Now I can take an additional 0.7% risk or 0.5% risk. Okay. And so, Gomez, really, really important question that you asked. If you take partials on the way up, you have to do the same on the way down, or else it will eat up your profitability. If you're taking the full stop loss every time, but you're only taking some partials, it'll never add up. So whatever strategy that you use, you have to be consistent on both sides. He said, "Bro, I don't do that shit. I take 1%." I'm messing with you, Serge. He said, "Say a prayer for that man." Guys, look, it's all love here. Like, I love every single one of you guys. If I do a call with you, if I'm taking 30 minutes or an hour of my life to do a call with you, just know that, I'm looking out for you. If I'm making jokes in here and I'm giving you a hard time, good. Don't be fucking throwing random lot sizes. I'm not here to fucking babysit you guys. I told you. I'm not winning a popularity contest today. All right, let me read some of these comments real quick. I just took partials on my EJ sell. Thanks, bro. Bro, I didn't even call an EJ sell, but you're welcome. Shit, I'll take the credit. Can't hurt. I've heard people talking about partials many times and thought they were nuts as they were losing out on TP. Totally get the point now. Dude, I'm on like the live stream and there's some fucking dude, should I call him out? All right, I'm not gonna do it. There are specific individuals in our niche that are very well known that are trying to argue with me on this live stream last probably 2 weeks ago on that record stream about how they don't believe in risk and reward. Guys, what the fuck are we talking about here? Like without risk and reward, there are two ways to trade, and I'll give it to them. You can either have a high win rate strategy, which is beautiful, or you can have a high risk and reward strategy, which is more likely for everybody. Okay. And so you can both strategies do work. Just understand which playing field that you're in. If you're going to take partial profits, just understand the game that you're in. Risk and reward and taking partial profits and that game is how institutions trade. They're trading billions of dollars of capital. They're risking a percentage of that capital per position in order to gain back a certain percentage of capital. They will close down some positions at signs of trouble, et cetera, et cetera. You're so right, bro. If I would have closed partial profit, I would have been up 6K plus now. We'll write it down. There you go, my guy. If it changes your life, send me a bottle. That's all I ask. If you guys didn't give us the free 24-hour stream, how can you give us good content in the paid things? He said, read that clown. Dude, suck my dick. How are you gonna come onto my stream and tell me to and post the same thing 5 times and tell me to read it and call me a clown? Here, we're gonna do this. Remove this dude. Bet. Guys, the paid members know exactly what time it is. All right. For $99 a month, one call a month would be worth that 99. One coaching call a month is worth that $99. And eventually, guys, I will be charging $600 to $700 an hour for my time. And so if you're not taking advantage and taking notes of my shit now, I promise you one day I'm going to be impossible to reach. These prices that we're offering now will stay, and we're going to build out the largest university for trading that the world's ever seen. We're going to be in every city. We're going to have small offices, and we will have coaches. But me specifically, I know the value of what we're providing here, guys. One personal coaching call is worth $99. And so this whole thing, we're not providing enough value for the paid members. Get the fuck out of here. All right, let me go through one quick thing. Not even going to give this guy some time, but what I'm going to do is show everybody else. Here's members' profits. This guy made $1,300. Big B in this made 1,400. Good stuff. And some of these are signals. Some of these are their own trades. $172. Awesome stuff. LPB going nuts on U30. All right, per usual. Adonis been crushing it. $3,000. Do you guys think it's worth it? This is all yesterday. Do you guys think it's worth it to pay 99 freaking dollars for these trades? Stefano out here waking up at 4 in the morning to do this shit. This guy lives in fucking Miami, waking up at 4 in the morning to give these London session calls, calling snipers every fucking day. One trade can make your subscription. I don't ever want to hear about lack of value here, guys. We know exactly what we're doing here. We are the low cost alternative to give everybody an opportunity. No one's ever going to be able to take that away from us. Says search says show them my results. I got you, bro. Where you at? Where you at? You were right up here somewhere. Oh, this was 10K a day. Where you at? You were right up here. Keith crushing it. Yo, did I already pass you? All right. Yeah, I'm not gonna waste too much time on that. These candlesticks are closing in a way that I personally do not like, especially for buys. Okay. For buys, I want to see that the zone that we have right here is being respected as a buy level. When things get respected as a buy level, they tend to reject pretty aggressively. Okay. I call these high reaction zones. Because we don't have a high reaction, I'm starting to realize that the longer that we consolidate here, the longer we are, or the more likely we are to see a fake up and a drop. Okay. So personally, I'm waiting for the first sign of a push up. I'm going to move my stops to BE. And then if there's another re-entry, it's going to be after the market open. He said, I'm gonna be head office in Louisiana because I'm not leaving. Sir, yo, well, I'll put you in that office. I'll give you the corner office with the glass windows and the whole nine. All right. He said, how you get rewarded without risk? You think the market's Santa Claus? Bro, man, I really wish I could call this person out. Such a clown. I had to cut this dude out the fucking stream. You guys will see this shit too, because everything that came out of his mouth was useless. I used to pay 175 for stop loss to hit back to back. $99 has changed a whole lot in a short amount of time. Kiana, I love to hear that. All right, those are the stories that make me happy. That's the story that basically, and guys, everyone's individual stories make me happy. This is not like a one shoe fits all, but the I used to be somewhere where my life was horrible and people were taking advantage of me and I was paying too much. And now I'm here paying half the cost, making 5 times the money, changing my life, understanding how to learn the skill. Yeah, I'm gonna talk my shit all day. That's what we're here for. So ladies and gents, real quick, I don't want to hassle y'all, but if you have an Instagram and you guys can take out your phone, do a quick snip, and then tag us in your story. We'll repost everybody. Instagram, just that's the way that Instagram works. If people don't post us, then we stop showing up on people's stuff, and we have to constantly fight for for people to show up on people's feed and not get drowned out by big booties and all this other stuff that people are following. And so, just to help us out, if you guys could mention us and tag us, that would greatly improve our likelihood of showing up. And I'll repost y'all. It'll be lit. Max says, "Heck yeah, that guy is tripping. I'm only 2 months in after y'all MLMs was telling me trading is not the way. I'm a little bit higher." Everyone inside knows we're getting a lot more value than what we're investing. I think some folks are like, dude, I don't want to say it out loud because if they realize that, we're getting way more than what we're paying, then they're just gonna charge us more. I'm gonna tell you guys a secret. You guys ready for the secret? If you're a Chart Addicts member, your subscription is grandfathered. What's grandfathered? Well, that means that your price doesn't change regardless of what we do in the future. If today we started charging $1,000 a month and every new person has to pay $1,000 a month, the price that you guys entered at, the ones that are currently in this chat, you will keep paying that price for life. There are folks that are still paying $30. We were a Telegram group. We had no substantial backing. We had no website. These guys sent us money to a PayPal account and they trusted us. They put faith in us. And so we're like, dude, and this was not a small decision. Like for me, guys, I had ran businesses before. I'd ran, a shoe reseller service. I had started a small community, this and that. I'd started. I'm not going to tell you guys about that business, but I have started significant businesses. When I'm here and people are literally trying to support people I don't know are trying to support because we're providing serious value. We're like, okay, we are going to reward these people for life, for having that faith in us. Someone said grandfathered means the price is your dad's dad. I mean, it could be. Grandfathered means that if you paid 99 right now, when the prices increase in December, oh yeah, newsflash, prices are going to go up because this value that we're providing is unmatched anywhere in the market. And I'm tired of I'm tired of being looked at as like the cheap alternative. I still want to be the cheaper alternative, but I think folks need to realize what we got going on here because this is not normal. But you're grandfathered in, long story short. And so if you guys think that talking about how much value that we have here is going to hurt you in any way because the prices may go up on you, that's never going to happen. Talk your talk, people. If you're making money with us and you're gaining a whole lot of value and it's a freaking steal, go tell the world. We're not going to change up the price. It's like Netflix. Like you guys would not believe what Netflix is giving me for $15 a month. It's like by the time you went and told everybody Netflix raised it to 100. No, Netflix is happy that you told everybody at 15. You said, right, we're locked in, so we're good. Bianca, you are my day one. I want to see you divisional head of operations one day for ChartAddicts. As crazy and outlandish as that sounds, with no administrative experience at all, I guarantee because of your tenure here, you're going to understand what we got going on. And, if you choose to stick around, there's going to be a role for you here. Said you guys are unmatched by any other Forex education platform, period, by price and value. You're not lying. I wish I could be humble about it. We built this thing on purpose. ChartAddicts did not come about as an accident. ChartAddicts came about by us obsessively asking our members, what can we do better? And then on some areas where members just don't have a clue about what we can do better, we have to innovate on your behalf. That's our job. And we continue to do that. We upgrade the website. We update the user interface so you guys can just get on the site, get the shit that you need, and get off. That stuff is not an accident. Everything that we do here is on purpose, and we're trying to get better. And the reason that I know that we're going to succeed is because I know a lot of different Forex companies. And these guys do not have the interest in being here for the long term. I mean, they do for now, but their actions speak louder than words. We are going to be here for the long term. ChartAddicts is a 10-year journey. ChartAddicts, the educational platform, is a 10-year journey. Those of you guys that have been on our other calls know we have ChartAddicts technologies and all of these other things in the works, but we're here until at least minimum 2028. After 2028, do we give everybody a piece of equity and we kind of just make this a decentralized platform? We'll see. But until 2028, we have a 10-year plan, and we are fucking crushing it. Because compared to what our 10-year plan said, where we are right now is insane. The connections that we have, the legitimacy that we have in this industry, the profitability that our members have, the fucking dream team that we've built of snipers. Who the fuck is calling signals like this? So yeah, that's my shameless plug about ChartAddicts. I'm literally going to sit here and talk good about ChartAddicts the whole time. He said, Roy, remove these toxic people. I promise you I will. There's no room for that BS around here. Would you ever upload the 24-hour live stream? Thank you for asking respectfully. The live stream recap video is going to be 2.5 hours long, and it's going to be posted tomorrow. Okay? It's going to be posted tomorrow. I'm not trying to rush our video guy because the guy's extremely busy, I'll be honest. But you guys have been asking for it. I keep texting him like, yo, where we at? Where we at? I don't want him to send back just a rushed product. You guys are going to notice the time that it takes to go through something like this. And hopefully you'll appreciate the time it took to make it. Okay. So give me the Discord link. After all that, you guys think that we're just some Discord group. Ladies and gentlemen, our website is unmatched by anybody. All right. If we're just waiting for these trades to play out, I'm going to give you guys some sauce. Here's the ChartAddicts website. All right. And this is the new and improved website. Some of you members are like, whoa, whoa, whoa. This looks a little different. Ladies and gents, we did upgrade the website. Like I said, we're always improving. So
I'm
you guys
so
can...
proud.
Oz, is that you?
Yeah, it's me, bro.
Guys, can we give a round of applause for Oz in the chat? Just kind of show some love for Oz and say thanks, Oz, because Oz got on my ass to get certain things on the website and certain components to make sure that we just got them right. This guy recorded videos and sent them to us about some improvements. Oz, love you, brother. That was a huge move. Not that we weren't going to get around to it, but just you doing that just showed a lot of, it just showed a lot to us. So I appreciate you.
Thank you, bro. I appreciate you.
That's the culture we have around here, guys. If you guys make a video roasting our website about shit that we can do better, I guarantee that we're more likely to fix it than get mad at you. And that's the culture you guys want to be around. You don't want to be in a business where you're like, oh, you guys should have this. And they're like, oh, yeah, fuck you. Like 99% of the businesses that I interact with, all right, Gold's Gym. If anybody has Gold's Gym, you guys know that that's their attitude. It's fuck you. We run the show. As a small business, I love this pivot mentality. We can pivot as often as we need to. So if you guys have any questions, if you guys have anything that you guys would like to see on the website or some tabs that might make your life easier, just make sure to let us know. And I guarantee that we'll entertain those ideas and we'll deliberate them to see if they're possible. Thank you, Oz.
Nah, bro, like I say, thank you, man.
So this warms my heart. Man, chill out. Okay, so if you guys are watching on YouTube, get on the freaking website. and look at all the different stuff that we offer, all the things that we do. They said, what's the link? Got you. It is now posted in the comments section of the YouTube, and it's been pinned. Okay? You guys can get on here. I'm going to show you guys what the members have access to. This is going to blow your mind. You guys are going to say, oh, my group is not offering this. They're not. Okay? First things first, let me show you. We have the schedule tab. Schedule is where folks can come on here and see what our weekly schedule looks like. You can look at our schedule up to a few months in advance. And so you'll see we have calls every single day at 7 p.m. Today we have 2 calls. Well, actually 3. Stefano did a call 3 hours ago for a London session. I'm doing this 8 a.m. Live stream, and then Professor Omar is gonna come on here and crush it at 7 p.m. Eastern time tonight. That's 3 calls in a day. You guys, are these other groups, are they charging you? Are they doing 3 calls in a day? Are they doing 3 calls in a week even? Right, getting on there, being able to ask questions and interact like this is crucial to me. I think it's a very important part of trading. So schedule is on here, but let's talk about the bread and butter of what ChartAddicts is. The only thing that makes us different than everybody else, besides the fact that we're better than everybody else, is that we provide personal coaching. And what does personal coaching mean? Personal coaching means that you get a coach to work with you personally, one-on-one. And so why is that a benefit? Because his problems and her problems, the people next to you on this call right now, their problems are not yours. The reason that you are over leveraging because you need money for your family and you have the perspective on trading is nothing to do with the guy who saw a video on YouTube and is over leveraging because he thinks it's the way to go. Same symptom, different causes. All right. And so the personal coaching will help you figure out specifically your issues, and then we can make specific adjustments to your trading so we can make constant improvements. How hard is it to schedule a call with us? Do we have to wait, months to schedule a call? Do they have to wait for a response from us? No, you go onto the schedule, you click a day that works for you. Nothing available Friday. All the calls have been taken. Let's do Saturday. Saturday, there's some time at 11, 11:30, and at 2 p.m. Let me click 11 a.m. Okay? You could choose all staff, or you can choose a specific staff member, depending on who you'd like to work with. My name is Roy Dunya. It's great to be your host on the greatest live stream ever produced. And if you guys want to schedule with me, you pick a time. Excuse me. You'll book a session free for members, and you'll hit next, and it'll put it on my calendar, my Google Calendar, as well as yours. I'll send you the link on Discord 5 minutes before the call, and we should be good to go. The call link is also being sent in the email nowadays, so you can just click on that and get straight to the Zoom call. It doesn't get better than that. I know some folks getting irritated. Man, when is he going to send me a live trade signal? I'm here for trading. Guys, I'm watching the market. I'm in this NASDAQ trade. I'm not in a rush. I'm waiting for the market to open so we can get a pop. We can close this trade or put our stop loss and break even. If this thing wants to crash out the sky, then we'll at least have made a solid 500 pips. So that's my update on NAS 100. Okay, really glad we didn't take that GJ long. And so now I'm actually looking for some potential GJ shorts. It looks like a laser light show on my chart. Here's the best way I can describe GJ. Price pushing bearish. We have this previous area of selling right here. Then we had this overextension up here. And then we might have a retest right here. Oh, wait, what does that look like? Oh, it's a head and shoulders. Right, so we get this retest right
Looks
here.
like shampoo, bro.
Right there. Exactly. Some all right shampoo. That stuff would dry your hair out like some fucking, like a bad trade. So draw my Fibonacci. First off, this is the beginning of the most recent trend, this double bottom here. That extension up, that's the end of the trend, that double top. And so all of these Fibonacci levels are going to be entries and take profit zones on the way back. So